Now speaking, Justin Furby, Vice President, Investor Relations. Workday reported strong results for their first fiscal quarter of 2024. Co-CEOs Anil Bousri and Carl Eschenbach, CFO Barbara Larson and co-president Doug Robinson discussed the results on the company's earnings call. Highlights include total revenues of $2.3 billion, an increase of 25% year-over-year, subscription revenue of $1.9 billion, up 32%, operating income of $295 million, up 54%, non-GAAP operating margin of 13.7%, up 230 basis points year-over-year, and total cash and investments of $6.5 billion, up from $4.5 billion. Workday also provided guidance for the second quarter with a projected total revenue of between $2.35 $2.37 billion and non-GAAP operating income of $3.06 $3.11 m. During the call, Workday discussed the importance of their customer relationships, new initiatives, and major announcements such as their acquisition of Peakon. The webcast replay and quarterly investor presentation are available on the company's website. Now speaking, Anil Bousri, Co-Chief Executive Officer. Workday reported strong Q1 results, outperforming against key operating metrics with 20% subscription revenue growth. With a healthy pipeline of opportunities and the value proposition of its full platform combined with AI/ML capabilities gaining momentum, Workday is positive about future growth prospects. The company is leveraging AI/ML differently than other enterprise software companies, emphasizing being human-centric to augment people and organizations, making them more productive and reducing business risk. It has access to an enormous amount of data due to 60 million users and 600 billion transactions over the last year, plus a unified data model for building and training models. Workday is also taking a leading role in global AI policy discussions and is looking at many content generation use cases within its talent management, recruiting, financial management, and HCM applications. It recently unveiled semantic search capabilities for Peakon Employee Voice and Predictive Forecaster within its adaptive planning application. To be more open and connected, it is continuing to deliver tools and capabilities via Workday Extend and has announced an expansion of its partnership with Alight to deliver an integrated payroll experience across 6 key regions in Europe. It was also named one of the world's most ethical companies by Ethisphere and joined Frontier, an advanced market commitment to accelerate carbon removal. Zane Rowe will be joining as the new CFO, coming from VMware, EMC, and United Airlines. Now speaking, Carl Eschenbach, Co-Chief Executive Officer. Workday had a successful Q1 in FY24, with strong new customer wins and expansions across HCM, financial management, planning, help, and talent optimization solutions. This was driven by net new customers, land motion, planning first motion, and renewals. Key customers included Dollar Tree, Interpublic Group, McLean Company, Dick's Sporting Goods, J.Crew, Whole Foods, Vanderbilt University Medical Center, and Extendicare. Global growth also contributed to the success, including in EMEA, where there was healthy growth in Germany, Switzerland, and the Nordics, and APJ, where wins included Insignia Financial and the Australian arm of Tokyo Marine. The company is investing in native payroll in Australia and has added significant sales capacity for Finns. Workday is also continuing to lead the market in cloud-native HCM, financial, and student systems in higher education, with wins at Northeastern University, University of Richmond, and Loyola University of Maryland. There was also success in professional services, financial services, state and local government, and healthcare, with wins from Absa Bank, Fannie Mae, First American, DJE Holdings, IBEX, and Interpublic Group. In addition, there was a go-to-market partnership with AWS and payroll partnership with Alight. As co-CEO, Anil's 30 years of product experience has been essential for driving growth, while Zane Rowe is joining the team as CFO to guide Workday through the next phase of growth and margin expansion. Now speaking, Barbara Larson, Chief Financial Officer. In Q1 of FY24, subscription revenue was $1.53 billion, a 20% increase year-over-year, and professional services revenue was $156 million. 24-month subscription revenue backlog was $9.79 billion, a 23% growth year-over-year, with gross and net revenue retention rates over 95% and 100%, respectively. Total subscription revenue backlog was $16.65 billion, a 32% increase. Non-GAAP operating income for the quarter was $396 million, resulting in non-GAAP operating margin of 23.5%. Operating cash flow was $277 million. Subscription revenue guidance for FY24 is now set at $6.55 to $6.575 billion, an 18% year-over-year growth. Professional services revenue guidance remains at $630 to $650 million. Q2 subscription revenue is estimated to be $1.611 to $1.613 billion, an 18% year-over-year growth. 24-month backlog is expected to increase approximately 20% year-over-year in Q2. Non-GAAP operating margin for Q2 is estimated to be 22% and for FY24 is expected to be 23%. Operating cash flow guidance for FY24 is now $1.95 billion, an 18% year-over-year growth. Capital expenditures are expected to be approximately $300 million. Goldman Sachs analyst Kash Rangan inquired, for Anil, what is your view on how Workday can monetize generative AI? For Carl, any update on the net new business back to the base initiative and its influence on results? Anil Boozri replied, ChatGPT is a generative AI that we are using to provide more accurate answers to customer inquiries. This technology uses natural language processing and machine learning to quickly and accurately answer customer questions. In addition, ChatGPT allows us to customize responses based on customer data, such as location or purchase history. We have seen an uptick in customer satisfaction since introducing this technology. Goldman Sachs analyst Kash Rangan inquired, Anil, how can you monetize the productivity improvement you offer customers? Anil Boozri replied, AI and ML are integral technologies that have enabled us to create products that weren't possible before. We've launched a few new SKUs based on these technologies, such as Skills Cloud and Talent Optimization. We'll be rolling out more in the near future, including content generation and performance reviews. However, we take ethics and security very seriously, so any implementation of generative AI will be done with great caution and care. Carl Eschenbach replied, we had a great start to the year in Q1 with our net new business. We saw strong performance across all industries, market segments and geographies, both in the US and EMEA. This is the lifeline of Workday and was reflected in our guidance for Q2 and the rest of the year. JP Morgan Chase & Company analyst Mark Murphy inquired, Carl and Anil, in this environment, where do you prioritize spending the next dollar, financials or products like recruiting and Skills Cloud and Talent Marketplace? Additionally, why has the expansion with ExxonMobil been so rapid? Anil Boozri replied, I'm confident in our long-term investments on the R&D side and that we are fully funded. However, when it comes to allocating go-to-market resources, this is a question for Carl. Carl, how do you think about that? Carl Eschenbach replied, we saw a solid performance in financials this quarter, and our go-to-market investment is paying off. Our land business remains strong, especially with regards to planning. We experienced success with Exxon, who expanded their use of our platform after starting with only a portion of their business a year ago. Planning has proven to be an effective lead-in for us and will continue to be a focus of our financials investment. Morgan Stanley analyst Keith Weiss inquired, can you comment on the current macro environment and is there any impact from the canceled Iowa contract in terms of RPO or bookings this quarter? Carl Eschenbach replied, thanks Keith for the question. We're seeing customers prioritize HCM and financial transformations to support their most important assets, people and money. We're proud of our Q1 performance, given the uncertain environment. We believe our platform helps customers drive productivity gains and a positive employee experience. Plus, our platform's consolidation play brings total cost of ownership benefits. On the financial side, our value prop resonates as finance roles call for agility and nimble forecasting. So overall, our value proposition is only getting stronger in today's market. Barbara Larson replied, Keith, as I'm sure you know, no single customer is material to our overall business. That being said, we do not provide customer-specific revenue or backlog disclosures. Doug Robinson replied, the quarter story is one of business diversity. We're not seeing pockets of weakness, and our diverse lines of business are showing strength by industry. The early renewal rate is a result of increased revenue from existing customers, who are doubling down and consolidating suppliers. Evercore IC analyst Kirk Materne inquired, can you discuss the unified data model and its advantages when it comes to AI? Do customers understand the benefits of this model with respect to the long-term product portfolio, especially as AI becomes more prominent? Anil Boozri replied, the great question you asked is a perfect example of why our unified data model is so beneficial. We have all HR and finance data in one place, with the ability to draw on third-party data through Prism Analytics. This is a major advantage for us compared to companies built through acquisition, which often lose intelligence along the way when their data is transferred into a data mart. Additionally, we have 60 million employees and hundreds of billions of transactions in a normalized and multi-tenant fashion, which makes it easier for us to run algorithms against the data. This is something that other companies struggle with due to lack of data sets and difficulty transferring data into one place. Carl Eschenbach replied, I'd say that customers are now more actively incorporating AI and ML into their buying criteria. We've seen this shift over the last year, with customers now pushing for these capabilities instead of just the sales and consulting teams highlighting them. Our customers have been leveraging our AI-driven predictions and recommendations for some time, but now there is an increased curiosity about how we achieve those results. Anil Boozri replied, Our company has been on the cutting edge of AI and ML technologies since 2014, when we began to use consumer internet as a guide for which new technologies should be implemented. We have used this approach to hone our offerings and create secure, privacy-friendly solutions. Now, ChatGPT and conversational AI are the next steps in our journey, but don't forget the value of more traditional AI and ML techniques. They have only scratched the surface of what companies can do to improve their businesses. Jefferies analyst Brent Thill inquired, Have you seen any changes in the appetite for financial services post-March? Carl Eschenbach replied, Answer, financial services is one of our larger verticals, and we've seen great success there. We recently crossed the $1 billion mark in ARR for the quarter. That segment includes insurance, asset managers, investment banks, commercial banks, and regional banks. This quarter we saw strong performance in our large enterprise segment in the U.S., while regional banks were a bit soft due to the banking crisis. Overall, however, our financial services segment performed well. Bank of America Merrill Lynch analyst Brad Sills inquired, What would you attribute the momentum you're seeing with expansion deals to? Is it planning becoming more of a system of record, macro changes needing forecasting and ad hoc analysis, or an emphasis on selling back into the base? Anil Boozri replied, Planning is a system of record that became glaringly apparent during the pandemic. Companies that could plan and adjust quickly and effectively fared much better. It's now an essential part of any business strategy. Doug Robinson replied, Our product investments have helped our sales effectiveness, and we are driving success with financial and workforce planning. We have added more fins-focused sellers, who are closely partnered with the team that sets the vision for Workday's full platform. This collaboration between setting a vision and planning is key to our continued success. Wolfe Research analyst Alex Zukin inquired, What macroeconomic trends did you observe throughout the quarter and how did these trends compare to the month of May? How do you decide when it is best to partner, build, or buy product functionality, and why was global payroll the right product to partner on in this case? Carl Eschenbach replied, Anil, let's start with your last question. I'll provide more context on the quarter and what we're seeing. To address payroll, our company has experienced steady year-over-year growth in this area, with a projected increase of 7% in the current fiscal year. We've been able to maintain cost control while expanding our workforce. This has allowed us to remain competitive in the market. Anil Boozri replied, We currently have 6 native payrolls and are actively investing in them. Additionally, we have great partnerships with ADP and Alight for HR Fins functionality that can be used across multiple countries. We want to give our customers choices, and this means having integrations that work out of the box. This opens up new markets for us where companies expect both HR and payroll capabilities. These strategic partnerships are essential to our success. Carl Eschenbach replied, The macro environment is uncertain and deals are taking longer to be approved, with the approval process reaching all the way up to CFOs. We anticipated this happening and have navigated these choppy waters well. We were prudent in our guidance for Q1 and the full year given the uncertain market conditions, and that's reflected in our projections. Despite the challenges, our healthy pipeline coming out of Q1 has enabled us to maintain our guidance. UBS analyst Karl Kierstead inquired, Could Doug and/or Carl comment on the seat expansion dynamic they are seeing upon renewals? Doug Robinson replied, Yeah, it's a great question. We anticipated some moderation in renewals this year, and that's what we saw. Our customers that renewed added more employees at the end of their agreements than they had at the start. So, it played out as expected. No deviation from our plan. Carl Eschenbach replied, In high-tech, the headcount contraction has been more severe than in other industries. Our customers who renewed with us actually expanded their headcount, while many others are reducing theirs through layoffs and reefs. Piper Sandler analyst Brent Bracelin inquired, What types of applications are customers building with Extend to run on Workday? How does exposing AI and large language models potentially impact the app build opportunity? Anil Boozri replied, I'd say Extend is a great way for customers to retire legacy applications and get the benefit of Workday's updated applications. It's an opportunity that shouldn't be overlooked by any customer, especially when it comes to AI and ML development. Our announcement at DevCon enabled native building on top of AWS, making Extend even more powerful and giving customers the ability to tie into the rest of the Workday application suite. Wells Fargo securities analyst Michael Turin inquired, can you provide any insight into how you have ensured a smooth transition with the management team and how we should model expenses for the rest of the year? Barbara Larson replied, thanks for the question. Our margins exceeded expectations in Q1 due to slower than expected hiring and timing of certain expenses. We are investing in strategic growth areas of the business with an aim to sustain long-term growth and deliver healthy margin expansion this year. I'm here through the end of July to ensure a smooth and seamless transition for Zane, who I know personally and believe is the perfect person to take the reins. Workday is in good hands. Canaccord Genuity analyst DJ Hines inquired, could you please discuss the progress of filling product gaps internationally and where you see the most opportunity to jumpstart international growth? Carl Eschenbach replied, yes, thank you for the question. We are highly focused on our TAM and currently only 25% of our revenue is from international markets, whereas half of the TAM lies outside the US. Our penetration into this total market is currently at 5%. We have made a number of leadership changes in Europe last quarter which have seen great traction. Last week, we added 2 new leaders in France and 1 in the UK. We have extended our partnership with Alight to gain more payroll in the market, and built out data centers in Singapore, Germany, and Australia. We also have a referral program for partners to bring us net new opportunities and will be rolling it out in APJ as well. The early signs of transformation in the international markets across all functions of the business are very promising. Anil Boozri replied, the payroll process in Japan and Korea is unique compared to other international markets, requiring additional capabilities. We haven't invested in these capabilities until now as the pipeline has been building. We have product gaps that need to be filled in order to improve our performance in Japan.